Welcome back, everyone, to our second half of the Ichimoku Kinko Hyo system. Today we're going to be looking at a live example on how we might utilize the Ichimoku system in order to take long or short positions in the direction of the larger trend at hand, right? So before we get into the rules and types of trades we can take, let's refamiliarize ourselves with the components of Ichimoku, right? So let's first identify Tenkan-sen. Tenkan-sen, again, is this light blue line right here. Next, we have the Kijun-sen. I love it to put it with a yellow line. And here you see it once again, very close to Tenkan-sen. Remember, Kijun-sen is also known as the baseline, where Tenkan-sen is known as the conversion line. What terminology, once again, does not matter. It's really up to your own personal preference. Next, we have Senku span A on the top here, right? And below it, we have Senku span B on the bottom here. And together, they make up the Kumo, or the cloud, as we like to call it. So again, in a bullish cloud, Senku span A will be on top of Senku span B. Conversely, with a bearish cloud, Senku span B will be above Senku span A. And if you'll notice here, this cross, right, where Senku span A crossed below Senku span B and we started a bearish cloud. This point right here is called a Kumo twist. It can be either bearish or bullish depending on which way the Senku spans cross. So if Senku span A crosses below Senku span B, we consider that a bearish twist, since we are now creating a bearish cloud structure. Now that we have everything identified, let's take a look at Chiku span, or the lagging span. And if we remember, Chiku span is essentially the price, the current price, plotted backwards X amount of periods. So using the 20, 60, 120, 30 period settings, 30 being the displacement, we'll see that the price is plotted backwards 30 periods. This is our Chiku span, right? And it follows price really nicely. So let's discuss one of the forefront ways to use the Ichimoku system, which is with a Kumo breakout. Now, a Kumo breakout has a couple of prerequisites that you'll want to follow religiously in order to have the highest hit rate possible when taking these types of long or short trades. So first things first, you want price to close above or below the Kumo, depending on if you're going long or short. So if you're looking for long positions, if you'll remember our rules, price needs to be above the cloud. If we're looking for short positions, price needs to be below the cloud. So that's the first rule in our checklist, right? Let's move on to number 2. Price closing above or below the Kijun. So again, Kijun is our friend. It's the trend setter in the system. If price is above the Kijun, we can say price is in a bullish trend. If it is below the Kijun, we can say price is in a bearish trend. So again, you'll start to notice we're adding all these little points of confluence to our trades. So if we're really bullish, we'll be both above the cloud and above the Kijun. If we're really bearish, we'll be below the cloud and below the Kijun. This is all going to make a lot more sense as we start getting into setups. So let's move on to rule number 3. In order to take a long or short position, we must have a bullish or bearish future respectively. Again, if we're looking here at this example right here, we see we had a bearish twist. So even though price is above the Kijun, denoted by this yellow line, it is not above the Kumo, and we do not have a bullish twist. Until we get those two prerequisites, the likelihood of a favorable long trade going in our favor diminishes greatly. Now, I want to take note of the last rule, rule number 4, Chiku span being above or below price. Why do we care about Chiku span so much? Well, if you remember, it's price plotted backwards 30 periods. Now, what can we say about price if it's in the same spot as it was 30 periods ago? Well, we can assume price is still range bound, right? So if Chiku span is inside of price like it was right here, we consider the asset range bound. And if we're range bound, remember, we do not want to use Ichimoku. Ichimoku is a trend following system. So let's take a peek at what we're having here. First of all, price is above the Kijun, yes. And like we said, it's not above the cloud. It's actually inside the cloud currently. And we do not have a bullish twist. But Chiku span is above the current price, right? So Chiku span at 595, and if we look down, 576. Chiku span is above price. It looks like we're starting to range and break out of that range and move into a trend. So let's let price play out a little longer and see if we can get all four on our completed checklist. So what happened here so far? We're above the cloud, we're above Kijun Sen, Chiku span is above price, but what are we missing? We're missing the bullish Kumo twist. We don't have it yet. So unfortunately, you really want to adhere to the Ichimoku rules very strictly if you want to get high probability breakout trades in the direction of the prevailing trend. So again, we're not in any trades here, we're observing. What do we see happening here? We notice the cloud is thinning out. It looks like we might get a twist soon, a bullish twist. And if we get that, we'll definitely want to look for long positions. Now, when it comes to taking long positions, using Ichimoku, since we have all of our prerequisites met, where do we actually take the position? That is, where are we going to get in and set our stop loss, our invalidation? Now, it's very important to note, before I move forward, Ichimoku is great at telling you when to enter the trend. It does not necessarily give you clear exits. And I'm going to really touch upon what I mean by this. Ichimoku is a trend following system. So the usual set and forget exit strategy that we talked about in the previous module doesn't always apply here. Can it? Absolutely. And I'll talk about in the next course a few interesting setups where set and forget works exceptionally well. But for now, we're going to want to look to the other types of exit strategies as it comes to taking profit for profitable trades. Trailing stop losses, moving our stops up in profit, or maybe even partial take profits. Ichimoku is going to help us basically exit and capture the meat of the trend like we talked about. So let's move into it and talk about how we might get into an entry once we get our bullish twist. Let's see what happens here. Okay, we just got our twist, right? We have all the prerequisites met. Let's take a look. Kumo breakout checklist. 1. Price closing above, below the cloud. Yep, we're definitely above or below the cloud. In this case, we're looking for long, so we're above the cloud. Number 2, price closing above or below the Kijun. Price is definitely above the Kijun here. Number 3, bullish or bearish Kumo twist. Well, since we're looking for longs, we just got that bullish twist. Awesome. Let's double check the last one. 4, Chiku span above price. Yup, Chiku span in comparison to the price just below it, we are above it. We've now fulfilled all 4 prerequisites for taking a Kumo breakout to the upside. Based on this information, we assume that the current asset has started an uptrend. And what we want to do is get in at the most optimal time and ride the meat of the trend. So, as it relates to Ichimoku, to get into a trade, you can do the following. You can blindly enter. Yes, you can market buy. But if you do so, you need to predefine your risk. That is your invalidation stop loss. Well, what did we say about Kijun-sen? Kijun-sen is the trend setter. If price closes, and I want to really emphasize that, if it closes below the Kijun-sen, we can assume price is no longer trending in the direction we originally thought, and we'll want to look for exits. Additionally, maybe Kijun-sen is just way too far from the current price to make it attractive from a risk-reward profile. In this case, we'll want to set our stop loss at or below the Senku span A or B, depending on where we are. In this situation, Kijun-sen is pretty close to the cloud, so you might want to set your invalidation just below the cloud, right? Or maybe even Kijun-sen. And maybe you're really thinking, hey, a big trend's going to start. Well, then you're more than welcome to set it below the second Senku span A here. So, once again, you can blindly use a market buy to get in once you see this, if you're impatient, and that's fine. Now, as we get into the further modules and discuss how to improve our execution abilities, we'll realize this is probably not the best manner of entering a trade. But remember Tenkan-sen? We haven't really talked much about it, have we? Well, what's beautiful about Tenkan-sen is it provides us an entry. We can keep our bids on Tenkan-sen. They can be trailing on Tenkan-sen or just at a certain level, and we can look to enter trades there. So let's say we set it right at Tenkan-sen, at 622 approximately. And we're setting our stop loss currently, let's set it somewhere right below Kijun-sen, right? So I like this 595 level. So a 621 entry, 595 exit approximately, and a target, right? Well, it has to make sense at first, but we're going to be using a trend following exit if we do exit. But with a set and forget method, you absolutely can use that. And let's say we're targeting, I don't know, this high here. There might be some liquidity at this tweezer top. All of a sudden we have a nice trade, a 3.24 risk reward profile, and it looks like it could possibly be a very successful entry. Let's see what happens as price comes back down to test Tenkan-sen. Oh, what happened? Price didn't actually touch Tenkan-sen. It was very close, but it didn't. This is where it gets a little nuanced with Ichimoku. Putting bids or asks blindly at these levels run the risk of getting front ran. That's why entering up here with our market order seemed like a pretty good idea right about now, right? We just set a higher high. Okay, let's say we missed that. Okay, not a big deal. We got a higher high. Where could we enter now? Well, just before I even go forward, does a SR flip right here make sense? Around 640? Let's see. This looks like a resistance, and we just had a higher high. I still think entering at 640, now moving our stop loss below Kijun-sen at 603, and again targeting that tweezer top, 700. So we have a risk reward of 1.7. It's not as attractive as the original setup, but again, we're not expecting to really take our profit at this predefined level. We are using exit strategies that include trailing stop losses, basically moving our stop up with the direction of the trend. So let's see what happens here. Oh, we got our entry right here. This Dragonfly Doji is a really nice SR flip that we noticed in real time. And let's say we saw this, we didn't catch the exact bid, it just missed our bid, that's okay. We could enter on this candle close just because we see this was a successful SR flip. Awesome. We're in our trade. We have a 640 entry and our stop loss is originally at 603. What happens next? This is key. This is really what I want to drill down to you guys. So we let price continue to play out. We had just got in again at 640 with a stop loss at 603. And price starts to trend. It's setting higher highs. It's moving up. And again, what can we do now that we've now moved from our 640 entry all the way up to 740. What would have been the bright thing to do here, right? Again, the beautiful thing with Ichimoku is we can use our trailing stops. And what do you think is the best way to trail our stops using the Ichimoku system? If you guessed Kijun-sen, my friend, you are absolutely right. Using the Kijun-sen as a trailing stop loss, we can lock in a lot of profits by letting price trend and unfold and trend and unfold. So, from our original 603 stop loss and our 640 entry, at this juncture, we just had a down candle. Maybe we didn't take profit up here, and that's absolutely okay. We're still in this trend. Now, after this down candle, we can set our stop loss at either a higher low, which we're seeing potentially here, right, at 670. Maybe we set it just below the 670 candle, and that's absolutely fine. Or we can trail it right below Kijun-sen, maybe at 666. Again, we can use the Kijun-sen as a barometer for the trend at hand. So from our 640 entry, we just locked in $26 worth of profit just by moving our stop up along with Kijun-sen. Maybe you don't want to trail it. Maybe you're afraid you're going to get wicked out because of the high volatility in crypto and other markets. That's fine too. You can move your stop just below this higher low, right? You can mark this higher low off and let price play out further. And what do we notice? Another higher high. And what do we notice with each higher high? It's pretty obvious now. Whenever we make another higher high, Kijun-sen moves up. It's a beautiful, beautiful trend-following trailing stop loss. Do you see why? As price moves higher, Kijun-sen follows. And I'm going to break down a little bit what Kijun-sen is exactly, right? So Tripp just talked about in the last module about Fibonacci levels, right? And he mentioned the 50% retracement. The 50% retracement, unironically, is actually the same exact thing as Kijun-sen. The only difference? Kijun-sen is dynamic. It moves with the trend as price makes higher highs. Tripp talked about swing points and really using the proper swing low and the swing high. Well, as you make new higher highs, there's a new swing high, am I right? Kijun-sen follows that. And that's why it's a beautiful trailing stop loss. It's following the trend as it makes new highs or new lows, depending if you're bullish or bearish, respectively. Again, we had got in again at our 640 entry. Our original stop loss was at 603. We had just moved it up to 670, locking in about $30 worth of profit. And if we keep moving it to higher lows, we can move it to 682, maybe 710, but maybe we want to keep it just below Kijun-sen. So at this juncture, 707. Let's mark that out. So from our 640 entry, remember, 640 entry, 603 stop loss. The trade has now evolved. We have now locked in $60 worth of profit. And the trend isn't done yet. We've had no warning sign that the trend is close to ending. So, once again, I want to remove these tools and I want to keep going through just so you can see just how powerful Ichimoku can be when it comes to following the trends. I want to pause here for a second. Actually, let's backtrack, right? So what happened here? Price came and moved very high. From our 640 entry, it is now at 1,035. And we haven't been stopped out. Kijun-sen is at 860. This is where it might make sense to take some partial profits. You've nearly 2x'd your return on your initial position size. But maybe you didn't, and that's fine. You're following the trend. You think it's going to go higher and higher. Awesome. Your stop loss is below 860. Again, we talked about the closing price being very relevant. So, with that said, we see what happens next. Price goes up, and then it gets smacked down. We have a huge sell-off. Price wicks right down to Kijun-sen. In fact, it went below. If we had kept our stops below Kijun-sen, we would get stopped out here at 885. And that's okay. From our 640 entry, that is a fantastic return, right? Now, however, this is why I talked about the closing price. And this requires a little more trade management that we discussed from Module 7. In this scenario, we would have wanted to get an alert as price touched Kijun-sen. Waited for the day to close, and look at that, it did not close below Kijun-sen. This is a fake out maybe. Maybe it's not. Maybe we're just happy we didn't get stopped out and we can sell a little higher. It's irrelevant. How you take profit is at your discretion. So, we've noticed that price now eventually goes below again, sets a lower low, and it closes below. But we have some wick action. Hey, this might be a bottom. Is it stopping us out at the bottom? Price continues to play out. It's unable to close back above the Kijun-sen. And look at that, a down candle. Now, if we originally just followed our plan, we got out right here at 890, right? Price closed below the Kijun-sen. We said, hey, it was a great ride. We made a lot of profit riding that trend up. And this is essentially a trend following system. This is the power of Ichimoku. So I hope after this example, you have a little clear understanding just what Ichimoku can do. And if you think this might be a tool that can help you in your trading, consider it. Because as we move into further lectures and we go on to the next more advanced courses, I'm going to show you a lot of different ways and nuances you can use Ichimoku to help create a profitable trading system. Thanks for watching, and I'll see you soon.